It was one of those things. There we go. I finally figured it out. I accidentally bumped a button. Okay, so as we're looking at the movement in Apple, it was mostly, I think, that many investors in Apple were shocked that Samsung was innovating. If you had either watched the Tom O'Brien show with me on the Tech Insider and or read the Tech Insider itself, probably 9 months, a year ago, we started talking about the curved screens and the edge of the screens starting to be used for additional real estate, kind of like the start bar down at the very bottom of Windows, and kind of like a start menu. Well, anyway, Samsung came out with some stuff, and it really looks good. And I think a lot of people had bought into the notion, perpetrated by a lot in the press because they were some of the first people to buy Apple iPhones, and therefore everything else was poo-pooed. We also have some of the biggest names in technology that cover it for the New York Times or any of the big newspapers that are now over at Recode or doing something else because those newspapers can't afford to have those people on staff anymore. So they went and started their own gig. But like Walt Mossberger out there today, just kind of a whole era of disbelief that anybody but Apple could do anything like Apple did. There was tech innovation before Apple. There's tech innovation after Apple. But kind of interesting. We're going to get kind of into the weeds in that for a moment. But, of course, that was the big news, and Apple selling off right now at $99.88 still is a huge part of what's going on in the NASDAQ today. Of course, still 13% of the NASDAQ, and you get 3 or 4% knocked off there. Quite interesting. Now, of course, they're going to come out with some new stuff, and everybody's going to get all hot and bothered come next Tuesday. So if I was going to think that Apple had made a top, I would look in and after next Tuesday, because no matter what anybody says, there's going to be some pie-in-the-sky stuff. There'll be people with astronomical high evaluations for Apple after they talk about near-field communications and all the new payment systems and all the money that will bring them in. Of course, they won't be talking about it Tuesday, but the analysts will basically be it. Now, we also been talking about one other thing, and that is Alibaba. My question is, did we just see the cash come out of Apple for Alibaba? And the question, and that may actually be part of it also. We may be seeing just one of the biggest, fattest lambs slaughtered just a little bit, $3, not a big deal, $3.50. And that may be for the Alibaba and some of these other IPOs. So the question is, would you sell your losers or your biggest winners? A lot of times Wall Street does the wrong thing, which is they sell the winners and don't sell the losers. But I digress. And, of course, we do that a great deal here. In Histoire today in 1720, after hitting nearly $1,000 in the summer, the price of the South Sea Company stock plunges to $180 a share on the London stock market. I guess that was probably pounds. The first great speculative boom has collapsed, and hundreds of the smartest and most powerful people in England are left with losses up to 80% in a matter of weeks. One legislator proposes tying each South Sea director up in a sack with a monkey and a snake and throwing them in the river. Angry mobs assault, nearly lynch stockbrokers in the street, and an investor who laughs at a joke is knocked off his feet in the exchange alley. So nothing's new out here. I recommend from time to time probably the best book for understanding bubbles, and that is a short history of financial euphoria by John Kenneth Galbraith. I think it's 120 pages, but I think kind of a must-read for anybody that wants to be around the markets for very long. But even if we go back to bubbles, I think there are recorded bubbles going back to 200 AD and maybe even farther back in the Roman Empire, where people did stupid things as a gang, thinking that there was easy money to be had. And, of course, there never is. And nothing's new on Wall Street because it's all about psychology. And while new versions of all the stuff that we've seen before will come up, kind of like a snowflake, no one are the same, but you'll always hear everybody say it's different this time. It wasn't different in 1720. It's not different today. And that's kind of it for what we have. Let's go to Apple real quick, AAPL. Just take a look at a chart. Now, we did and had been talking about how Apple had really not blown through the $99.44 high out here with convincing a volume. And more interesting was the long-term move that this had hit and went above. But you have a valid sell signal out here. I would just think probably just a little bit early on Apple to go ringing the bell on this one. But, of course, we had the September 21st high at $100.72. I think on the 26th, I put out a special report saying that every one of the suppliers looked horrible in 2012, and to watch out below. They were cutting orders to those suppliers severely. And, of course, Wall Street already knew it before anybody else, and you could see it not in Apple, but all the stocks below it. So today's probably a good idea to look at all the input stocks that are feeding Apple, and so far not showing a lot of weakness, which makes me think we've got at least another week here before Apple sees some kind of high. But, you know, you needed 140 million shares. You got 98 million shares as the highest volume into this push. And today, well, actually you had less than that. What do you have, about 55, 52, 53 million shares as you blew through that high. And, you know, there's a nice gap out there, probably 75 to, $80.50, something like that. When we look at that, what is that? Gap up on 189 million shares on the 24th of April. And my guess is that probably in a higher trading range out here. I don't think Apple is over until probably after the first of the year. But we'll watch it closely out here. But I have a feeling that we're going to see a lot of people short the stock only to get clubbed next Tuesday when everything under the sun Apple is supposed to have created, and no one else can ever compete against them because Walt Mossberger is a big Apple head. But we'll talk about that a little bit more. Other things going on in the industry out here, besides Walt Mossberg being an Apple blowhard. Of course, I've been accused of being a Microsoft blowhard. I just think that open systems, those walled gardens, haven't fared well in history, and I don't see that changing anytime soon. But we did talk about Samsung, and of course Samsung, the stock is just about untradeable. I don't know how you'd ever make any money. It's such a huge company that the whole part of this smartphone business really doesn't move the needle enough to get too excited. It more than often moves Apple, which is what we're seeing today. But again, we were talking about that edge display. They were showing that. They were showing a kind of a neat bit of kit, as they say in England, which was some goggles that allow you to pop your smartphone into it and use it as a virtual reality headset. They were also showing the latest version of the Note, which is slightly different. Probably the biggest thing is a quad high-definition display. This thing's like, it's some ludicrous number of pixels out there. And, of course, the whole phablet thing that Samsung brought up by making these larger phones really looks good. And, of course, almost all of this kind of shocked a lot of people, thinking that Samsung had thrown up their hands and quit. You see the effect in Apple today. But I look at and think that this 103.74 is probably going to get attacked next Tuesday. as we go into it. So we're going to be looking at a great deal of stocks today. But the first thing I do want to talk about is Toll Brothers. When we look at earnings on it today, let's get a little shorter time frame. Off a couple of bucks, certainly came back and filled that gap that we had on the 19th. That gap didn't have a great deal of volume, but certainly blew through it on lower volume. They are just starting their conference call right as our show started, so probably going to see some big movement in that. Let me pop it up and get a current quote here. Off $1.50. Look for them to, of course, kind of sweeten it for Wall Street and make it look a little better. But basically, there was one liner that pretty much put the tail on the donkey on this one, and that was them talking about having a reduce in upcoming orders. And they said that it looks several months out, and they don't see any real changes in the near future. So a lot of these custom homes and more expensive home that Toll Brothers sells, looking like the orders, at least through the fall, are going to be light. We'll be back in just a minute. You can always give me a call.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. You got a request to look at CMG. We were talking about Toll Brothers. Probably the big reason I wanted to look at this one is Hovania comes out with earnings in the morning. We'll get to it in a minute. CMG, and this one's certainly starting to go sideways. Of course, the story on this is it can only go up. Boy, I tell you what, I hadn't looked at this in a little while, but boy, if I didn't know better, I'd say this is distribution. I mean, some big distribution out here. What do we got? 1, 2, 3, 4, 5, 6, 7. 1 day out of the range, and they sold into it, and then so you got just about everything out here. Why? I tell you what, if this market cracked, this thing would be probably back to 620 fairly quickly. So we'll have to keep an eye on that. But boy, if either someone's hugely accumulating it or hugely distributing it, you know, I wouldn't be the guy buying it at $700. So I don't know what the question. Chances it will fill the gap is the question, and you got a huge high volume gap out here with 2.2 million shares. You're turning 200,000 shares today. Yeah. Pretty much 300,000 shares. I'd say as soon as they're done distributing this thing, I'd watch out. I think that we're probably going to see this thing go sideways maybe a little bit longer. It's going to take a while to distribute this much stock, but I don't know if they made a perfect quarter that can't be duplicated ever again. But somebody at Wall Street, I'd say that 80% chance this is massive distribution. You don't have a narrow trading range after a huge move up like that, and not come back, test this thing. If it would have just come back, tested this gap on lighter volume, then you could make a case for much higher prices. Of course, it did jump the shark, actually jump the creek, as they say, at 622. With some fairly decent volume, so you can't say it wasn't a legitimate breakout. I think what you can say, though, is that someone's ringing the register up here, and who knows how deep they are in it. This would be a good one for the old Bloomberg. Maybe I'll ask Tom to take a look at it and see if we've got a lot of people diving out of this one. I'll try to look during the break and see if I see insiders or any big funds selling this. But that would be a very interesting one to look at. But we'll come back to it. Chances that'll fill the gap, I'd say right now about 80%. And you're looking at it probably won't fill the whole gap, but my guess is 620, 625, probably going to fill half that gap. So not a bad move out here. Maybe a good play with options. Have to see what they look like after today with everything going on in the market. What else do we have going on out here? Let's take another quick look at the S&P. We're off 20 points on the NASDAQ now, and we're flat on the S&P, but still above at 2,000. Dow Jones is up at 25. So didn't expect a lot. In fact, I kind of think that the market is close to topping out, but probably won't until expiration next week. The latest I've heard is that we're looking for something around the 18th as a possibility for the what are we at? 1, 2, 3. Oh, I'm off by a week by expiration. If it is September, that should be the 10th. I've been telling everybody. Yeah, I'll have to go back and credit. First Friday would be this Friday. Yeah, so we go to the 19th. They've been talking about the 18th as the date to roll out the Alibaba IPO. So we'll see if we hear anything about that today or tomorrow. I must have been looking at November, or August. Yep, that's what it was. I was thinking about last month. I'm going to have to correct that now. Anyway, what do we have going on out here? And that is expiration is the 19th. So we have an entire week now to go before we get to Weird Wally Wednesday, and then expiration the 19th. So I don't know how I got all wrapped up in that. Probably looking at the August expiration. Anyway, we'll be back in a minute. I'll start looking at some other stocks that have moved. We haven't talked about a great deal of these stocks, so we'll take a look at them. But a lot of them up there hanging out at highs. We'll be looking at Yelp when we come back, but you can always give me a call at 877-927-6648 or email me at path@tfnn.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we're back looking at Yelp, and a couple of things I've got on my list here I didn't have time to make slides for. So we'll get to those and some additional stuff. But Yelp out here, breaking above the previous high. A lot of these NASDAQ stocks doing this and pulling back. We saw that in Apple. July 2nd, we saw 5.1 million shares at $82.81. And, of course, this had a kind of a bad reception to the earnings, but it gapped up and came back a couple of times. And its movement seems to be a little bit puzzling, at least to me. Bad news is good news. Doesn't matter what they're talking about. Everybody wants to buy this again. But certainly we're seeing, or we should be seeing, some fairly decent volume today. And July 2nd high, 5.1 million shares, had 3 million yesterday, 2.4 million today, pulling back into the trading range. Just makes me think that we are probably in this upper trading range for a while. But it is interesting. Oh, a couple of things I wanted to get to. Amazon, AMZN, down a little bit. Probably would have been anyway with the Apple news and being a big member of the NASDAQ, probably seeing a little selling pressure. More interesting to me is the CFO is leaving. He will not be leaving until the spring of next year. But my guess is that I think he's been with them forever. But my guess would be that they are, or he's thinking, this wouldn't be a bad time to cash out. Don't want to be hanging on to this one too long when everybody wakes up to the fact that they're still not making any money and they just continue to spend. Probably not a bad time to think about ringing the register, and I think you might see some more pressure in Amazon because of that, but kind of interesting. Mario Draghi is, of course, going to be out tomorrow morning. He's jawboned an incredibly a lot, so we want to be watching that in the morning. If he actually does anything or just talks it up again, if he talks it up again, look for the euro to probably strengthen and get a little bit more of that move out that we've looked at. Hovenia, we talked about Toll and Hovenia in the morning. Of course, Hovenia, $4 or $5 stock, hadn't been moving a great deal. But those are the things we probably are looking at the closest over the next day or so. I thought, I was sure that options were expiring. Boy, I feel stupid now. Teradyne, TER. This is another one up here kind of bucking these highs. You got a couple of them with 2.8 million and 2.7 million back at the end of March and the 1st of April. With 2.8, 2.7 million shares. Tried to get into it July 3rd, 1.7 million shares. We're back up in it again with 2.1 million shares. So volume's off almost on all these stocks. You keep thinking that you're going to see a little bit more volume, but don't see a great deal. So what else do we have going on here? A lot of stocks, some new stocks that I haven't seen a great deal of. Proofpoint. This one's you don't hear about every day. You probably don't hear about it at all. This is my introduction to this company. And hadn't heard about them, but they're kind of quietly out there making integrated software for protection of your computers and from the internet. So I started reading a little bit more about this one. Doesn't look real good right now. I had a huge volume day with 2.2 million shares back on, June 27th, and 2.2 million shares. Even at the high, July 2nd, if you use the most lenient version of volume checking, July 2nd high had 1 million shares at $40.03. This thing got into it for $41.04 on August 27th, but just meandering around these highs on lighter volume. But even today, 138 million shares. So some of these stocks are kind of interesting to me. Iron Mountain, this one's hanging around these highs with very light volume compared to this big pop-up. So kind of another one out here, not really making a consolidation pattern, but certainly looking at the $36 high that you had on June 26 with 15 million shares. And you just the best you can get is about 1 million shares on the 21st in the last couple of weeks. But you got 1 million shares on the 2nd yesterday. And today, 300,000 shares. This one did come back and at least fill part of this gap out down to 32.60, but you'd think that probably there's a little bit bigger double gap. That gap had been acting as resistance. In fact, let's go back a little bit farther so you can see it. This thing actually fell apart, and the only part of that gap that is still open from 2013, actually June 6, 2013, you're going to see this gap down that happened on 16.6 million shares. So we hop back over that. We've come back to it on lighter volume for the gap down. But my guess is that you're probably going to see this $32 range tested yet again. But even on the short term, 1 million shares going against 15 million shares. Looks to me like if I was long this thing, I would be thinking about getting it out. Home Depot, of course, none of the housing news has been real good. Their news has been fairly good. The question is, they just lagging the housing market at this point? And the question, I think, is probably yes. I've been in Home Depot and Lowe's probably 10 times in the last 2 weeks. I've got several projects going on. And at least, well, there's there's 2 Lowe's and 1 Home Depot close to me. Depending on what I'm doing and where I'm going, I might end up at either Lowe's on the far side and a Home Depot just not 4 or 5 minutes up the street. So Home Depot is normally the one I'm going into. But the Lowe's incredibly vacant. And I don't know if that's just anecdotal or if it's the way it's all over the country. But I have seen in the last month, maybe 6 weeks, very, very light traffic in those. I did see a double rainbow, though, Saturday night, because I popped in there to get something on my way home Saturday probably about 7 o'clock at night. I don't know how many people were down here in Tampa and looked, but I'm trying to think if I've ever seen a double rainbow before. But certainly there was one down here Saturday night. I went out and bought a lottery ticket. It didn't win, but I figured looking at that double rainbow, that was the day to throw my caution to the wind and spend a whole $2 on a lottery ticket. But interesting stock. Some other ones out here. Cameron International Corporation. Well, I'll get you the profile on this one. and provides flow equipment product systems and services worldwide. Its drilling and production system segment offers systems and equipment to control pressures and direct flows of oil and gas in wells. Of course, this is a big fracking play with their pumps to pump in and take out oil. But another one of these out here testing the previous high with light volume. The July 25th high had 5.3 million shares, and of course we got into it yesterday with 2.4 million shares, closed back into the range. Barnes and Noble. Did anybody know this company was still around? How did they have a $23 stock price? I thought that they were gone and buried. I hadn't even looked at the stock in a while until it popped up on my scan. But it is, it was 7 o'clock, my engineer's saying. He saw the rainbow at the track. Double rainbows are extremely rare. 1 out of 100 rainbows is the double rainbow. I looked it up after I came back. To June 26 at 3.5 million shares at $23.56 on Barnes & Noble. And very light volume up here the last couple of days. Trying higher today on 423,000 shares. Wonder next earnings date is on this. Okay, September 9th. So this thing's probably going to hang up here into earnings, but not a lot of gusto as we do look at some of these higher highs out here. AWI, another one, Armstrong Worldwide. This one kind of got blown apart in the housing debacle and also during earnings. A nice high volume low out here that needs to get tested. And we are sitting watching this one really come back into another gap. That gap, another one that came down with heavy volume on February 24th. So, I guess the carpet business, probably like the housing business, kind of interesting to see this stock up, at least trying to push a little higher today. Needed 1.7 million shares for the last test from July 2nd. We got 1.2 million shares, well, actually 1.2 million shares yesterday. We got about 400,000 shares today. But, of course, you're going up against that gap down with 5.1 million shares. Going to be a lot of people wanting to get their cash back, and that's what this thing is pretty much hammering against. A little better volume yesterday than today, of course, but still nowhere close. And this would be interesting because you do have that high volume high out here right around $49 to $51. And my guess is that you're probably going to see that tested sooner rather than later. Probably some good news or something out here for this gap up at 5 million shares on, what is it, the 1st. But still nothing close to what you need, especially if you like looking at my Power Law Vector Indicator numbers. This is one that really stands out with the energy on the way back up. Other than that one big day on the 1st where this thing popped on July 1st. August 1st. This thing has had light volume in maybe even one of the better days yesterday as this thing got sold off as it popped up. But probably going to start seeing lots of resistance in this one. Let's see, what else do we have? AMN Healthcare. American equity investment companies. This one's banging away at some fairly decent highs at $25.30 from the March 25th high, 1.5 million shares. Of course, the July 1st high, $25.20, so a dime short. You'd like to see that thing. And, of course, 1.6 million shares. So it got into it with just 100,000 shares more. So we're back into it. But today, pretty much that third time looks like it's the charm. Yesterday, 380,000 shares. Today, 143,000 shares. So starting to see some weakness in some of these. ACHC, Acadia Healthcare. This one looks very interesting out here. You've got 3 higher highs. I would have liked to have seen this last one just maybe another 50 cents higher, but it has seemed to look like this thing's pretty light in the juice department. You look at the June 3rd high with 1.8 million shares at 49.29. Yeah, you get another little spike on July 29th at 52.09 with 1 million shares. And then, I wouldn't call it a spike, but a little test on August 29th with 340,000 shares going into that weekend, of course. But today you should have started seeing volume come in, 155,000 shares so far. So just keep an eye on some of those. Anyway, you can always email me at path@tfnn.com. Certainly can do that during this break. You can also post a message in the den and give me a call at 877-927-6648. Let's see how Toll Brothers is doing during their conference call. Still off $1.50. So not much happening in that. We didn't look at HOV, which is going to come out with numbers in the morning. Of course, Toll Brothers, higher-end houses, Hovenian, lower-end houses, if memory serves me correct. It's off a little on that, but volume picking up a bit. This certainly looks like you'd want this to come out here and test $3.75 with lighter volume if you were thinking about buying this. But certainly no real juice in this thing since it hit its last high on August 19th, and pretty much at $4.40 has been going sideways out here. I would say, especially with Toll Brothers, unless they sell something, say something really different in their conference call going on right now, and from the stock price, I don't really see that. Looks to me like you're going to start seeing 375 on the horizon for a Hovenian. RPAI, Retail Properties of America. This one's kind of an interesting stock. We don't have enough time, I think, here before the break. When we come back, we will look at this one. But I kind of like this one out here showing pretty much what we've seen, which is a lot of these retail stores looking awful weak with cons coming in, and Best Buy also being fairly weak. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got a interesting market out here, but we do have Sam from Irvine, California, on the line. Give me a full report, Sam.
Hi, Dave. Thank you very much for taking my call. I have a question about LNG. About 2 years ago, in 2012, I was looking at this stock, Cheniere Energy, for around $17.
Yep.
I did some analysis, and I looked at it, and I looked at some brokerage firms' ranking, and they were saying very bearish, under 1 or 1. The stock has never looked back. It's the 52-week high, and still they're saying very bearish. I want to know where I went wrong with my analysis on this particular one, because I see the future of liquefaction of the gas, natural gas, as a very, very promising one for the world. And I wanted to get in a first floor, but I lost it. I just want to know where I went.
I think probably the big thing that it has changed, you didn't get a real clear technical breakout on this. I think it was more of a fundamental story, and that's probably why you didn't see it. I didn't see it either, and especially the last month or so. I should have known it. But there's a great deal of people that are, how can I say this, that are buying this because of what they do, and the thought that if Putin decides to shut off Europe, that this thing's going to be a huge player in this winter, because Cheniere's got a bunch of equipment for liquefying natural gas, not just natural gas, right? Putting it in a pipeline as a gas, but actually liquefying it. And the thought is that all these new tankers that a few of these companies have come out with that went public over the last year or 2 years that are now have these LNG boats or ships may be called on to do kind of the second Berlin kind of airlift to Europe. And I think that's kind of been in the background for a while out here. And like I said, I just think a lot of this had kind of changed, especially being able to get some of that natural gas out to those ships from the not Balkans, from the North Dakota area. And I think being able to get it out of Canada with their new pipeline is another issue. But a lot of thoughts out here that we're going to be sending natural gas liquefied to Europe if Putin pulls the plug on them. And I think this one's a huge hedge bet for many people in that sector. So I just think that I looked at it too. I don't think you did anything wrong. Just sometimes stocks get away. I think it was more of a fundamental than a big issue. You didn't have that real one day where everything just took off and that was it. It just kind of has meandered up higher and higher. And I think mostly as Russia continues to put pressure on Europe. So a global issue, probably less than a technical one in the stock market.
How come it's not correcting at all? I mean, yesterday
because the things continue to get worse in Europe. The whole idea, I think, even back probably to June of last year, has been the thought that since Putin actually went in in Georgia and stole a little sliver of Georgia, is that he would one day cut Europe off, and I think that's why it's been moving. Thanks for the call. We'll talk more about this tomorrow if you want. Hang on, and we will see you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.